I'm here today with Anders Palmgren, who is the Head of Corporate Finance for Catella, who is one of Europe's leading finance and transactional companies in the real estate market. Welcome to MIPIM.
Thank you.
So look, just tell us a bit about what Catella is doing here at MIPIM. What are your main objectives while you're here at MIPIM?
It's a very efficient manner to meet primarily then sort of or clients from our non-core markets, so to speak. People that are, there's a lot of them to meet and greet here, sort of in a very short period of time. That's sort of one of the objective. The other one is obviously we have sort of a number of mandates where we're then actively looking for investors, which is also a sort of excellent opportunity here at MIPIM. We're about sort of 250 or just short of professionals across Europe. We primarily deal with real estate transactions, so sales and acquisitions, and also sort of equity and debt capital markets.
Now, Catella is primarily a European-focused real estate company. Maybe if you can talk about the differences that you're seeing across Europe, because it's a very diverse sort of spread of geography. So just tell us a bit about what's happening across Europe right now.
I think that in itself it's not very surprising. The main focus of the main talk of the day is financing, and or rather the shortage of it, and that affects different markets in different ways. You have markets where the banking system is relatively strong, such as the Nordics. You have other areas where it's very weak, as in parts of Southern Europe, and bits in between where it's functioning reasonably well, such as Germany. Now that obviously affects both transaction volumes and pricing for certain type of assets.
The current economic situation in Europe is, I guess, some would say a little bit unstable. It's a bit unclear where things are heading. How is that seen affecting the flow of capital? And have you seen flows of capital, as you said, from perhaps out of areas perhaps that are a little bit more unstable or unpredictable into the safer havens? Have you seen flows of capital moving?
Unfortunately, I think the weakness of the euro, I think, is to some extent make that investors from other currency zones actually tend to stay away from Europe. If you look at, for instance, from Asia or US, or even investors out of, in some extent, Switzerland has historically had problems with sort of currency appreciating against the euro. So yes, it is an issue, and it's not contributing to capital flows, rather the other way around.
I mean, one of the topics that's been very prevalent here at MIPIM over the last number of years has been around sustainability. Sustainability aspects of development perhaps get put to the side. What's your view on that, and do you think sustainability is still critical? Absolutely,
but I think it's a twofold issue. When you're looking at new developments, tenants' demands is basically for sustainable buildings and actually willing to pay a premium. In the capital markets, they'll attract a lower yield. So developing new product, there's definitely sort of an advantage for sustainable buildings. I think the problem lies in the existing buildings that are not up to scratch. So the capital needed to, or if one were to try to bring all the existing buildings up to sort of the highest, most modern standards, that would require sort of an enormous amount of capital, which is, I don't think, not available at the moment.
Well, it's one of the interesting challenges, isn't it, that particularly Europe faces, because you've got large urban centres in Europe that are often very historic, very old. You've got buildings that have often been in place for hundreds of years. How do cities and how do owners of properties look at retrofitting buildings to get them up to these modern standards? Is that something that is feasible, or do you see that that's going to be more challenging?
It will most likely be more expensive, as it always is, to go into sort of old buildings and try to fit modern things into them that weren't originally planned. So yes, it'll be more expensive, but I think the fundamental drive to have that done is there from authorities and occupiers.
Where is your focus in the next 12 months? Where are you looking for, or where do you see the opportunities in Europe?
I mean, the most liquid assets are sort of it's in the core and prime sector, where the investors who are not depending on external financing are active. So that's one field of sort of more sort of obvious transactions. The other one where we tend to focus right now is actually to work in the debt space to help investors find senior financing, not only from traditional sources, that's the banks, but also from institutions. We've recently, for instance, done a 120 million euro bond issue in Sweden. We've also done a number of transactions where sort of direct lending between institutions and property companies. I think we see a big difference if you compare years. I mean, in 2007, I think there was a lot of cross-border activity within Europe. I think it amounted to about almost 50%, I'd say. I mean, recently, however, the cross-border volume has dropped dramatically. I only have the accurate number in my head for Sweden, where I think it was only down 10% in last year. So I think also looking at 2012 and probably 2013, we will see a dominance from sort of local investors. Although I think, I mean, there is momentum for a slight growth, but I don't think it'll be enormous. It'll be selective, both in terms of countries and type of product.
Do you see some major trends that are going to be shaping the property market in the next couple of years?
I think the biggest trend will be alternative financing. That'll be the primary driver of the real estate market going forward.
Well, thank you very much for your time. Appreciate that, and we hope you enjoy the rest of your time here at MIPIM.
Thank you very much.